Hello, everyone. Thank you so much for joining us yet again on this Monday for a Monday Mortgage Minute with Linda May Tomko of Home Financing Advisor with ScotiaBank. I'm Alex Ward, broker owner of Maxwell Devonshire Realty, and I have the absolute pleasure today to show or talk with you about collateral, which is what Linda May is going to be discussing about, which is the fourth C of credit. So, Linda May, the floor is yours.
Hello, everyone. I hope you had a great, weekend. Now it's snowing. So I've heard it's snowing pretty much across the province. So hopefully everybody drives safe on this Monday morning. The fourth C of credit is collateral. So we went through, we went through three, we went through character, then we went through, capacity, and then we went through capital, and now we're on collateral. So what collateral actually means is what we're holding in securities as security for the loan. So because we're talking about mortgages, it's obviously going to be the house that we're holding as security. If we were talking about something else, if it was a loan, maybe it was a vehicle, but in this case, what we're holding as security is the home that you're purchasing. Now, what the two major things with that are, is the house resellable? That's what the bank looks at. And what's the condition of the home? So a lot of times what happens with collateral, in order for us to confirm that we will actually lend on that property, is we will order an appraisal on the property. It doesn't happen all the time. If you're purchasing and putting 20% down, you can pretty much bet that you're going to have an appraisal on that property or some form of that. There are, maybe not a full appraisal. There are other means of kind of coming to the same conclusion via appraisal type products. But the property will be looked at and assessed to confirm that we will actually hold it as security. If it is an insured mortgage, we as a lender don't make that call. It's up to the insurer whether they're going to pull an appraisal on that property. And if they do, we don't order it as a lender. The insurer actually orders it. Usually it's not as high of a chance that there's going to be an appraisal on the property if it's insured. Now, turnaround times, we like to say 24 hours for a turnaround time for an appraisal, but depending on where the property is located and the situation, sometimes it can take longer because it's up to the appraiser to get us the information back. Now, with that said, if we deem the property to be, less than the value that you're purchasing it, we may still write on that property, but we would either need more down or some sort of other way to secure it. If we deem the property to be something that we would not consider financing, then we won't be moving forward with the application at that point for that particular property. It may mean that, your credit's good, your income's good, and your capital's good, but the property itself, we wouldn't lend on. And then the flip side of that, if the property is good and we've already verified those other three things, then we would be moving forward. And that would take us to the fifth C of credit, which would be conditions, which we will follow up with next week.
Yeah, thank you so much, Linda May. That was fantastic. I hope everyone has a better understanding of the process on how it works. So that was Linda May Tomko, Home Financing Advisor with Scotiabank, shedding a little bit of knowledge on you on this Monday morning Mortgage Minute. I'm Alex Ward, broker owner of Maxwell Devonshire Realty. Hit those like and smash those subscribe buttons, and we look forward to seeing you next week. See you, everyone.
Have a great week.